All right, Derrick Oldensmith from T3 Trading. Derrick, how you doing this Tuesday morning?
Doing pretty well. Glad to be back on the show. Thanks for having me.
Of course, thanks for hopping on. So we've had a kind of, wild week. We got earnings, you have, Fed news. What's been kind of top of mind for you? What have you been watching?
Sure. So there's a lot going on right now. And one of the things that's top of mind for me is the spread that we're seeing right now between IWM performance and QQQ performance so far this calendar year. I think it's like an 8% difference. I think you got the Qs up about 4+% at this point on the year. You got the IWM down about 4% or so on the year. It's becoming a pretty big spread. We just got through most of the Mag 7 earnings reports, and they were, for the most part, pretty objectively phenomenal. You can't deny that. But it also seems to me that positioning in those names is starting to get really historically stretched. So I'm just becoming a little bit concerned here. Obviously, the technicals of the S&P and the NASDAQ still look really bullish. The IWM maybe not so much. I'm just starting to become a little bit concerned that we might be getting a little bit more toppy at this point. And it's almost weird for me to say that because I'm historically an optimist. I tend to be on the bull side of the market, but just hitting a point here where I am seeing some things to be concerned about under the surface. You've got the average company that's out there down, but the S&P up. And by the way, that doesn't necessarily mean that the market has to roll over. There's been plenty of instances in the past where leadership has been sparse like that, but then the rest of the market catches up. I actually think that this time might be a little bit different, where hard to call for a real pullback when you see what that Meta earnings report looked like in big cap tech, but at a minimum, I think that it might struggle for the Qs to really give a lot of.
What would change your mind on that trade, Derrick? Like, what would change your mind? I mean, people have been talking about the catch-up trade, It doesn't look like rates are going to be. Is there a number? Is there like seller exhaustion? I mean, what would change your opinion on that?
So in some ways, I actually think that the easier, better trade will be to look for the IWM buy, the mid-cap, small-cap buy at a certain point. But the thing that you have to wait for on that, and I do think patience is required, is we have to wait for the market to have a reality check on the amount of cuts that they're still pricing in at this point. The Fed has been saying from the beginning, 75 basis points worth of cuts in the year 2024. The market was pricing in 150. It doesn't make any sense. And those mid-cap, small caps, they're very interest rate sensitive. So while the market is still kind of repricing what Jerome Powell was just saying on 60 Minutes and bringing those cuts back down to reality, you have to be a little bit patient. But I think that at a certain point, that does set up for a pretty good long trade. But in the more intermediate time frame until we get to that point, I'm actually becoming increasingly bearish because I don't think we're at that point yet for those IWM names to be a strong buy. And just the positioning in the big cap tech stocks just seems so stretched that I wonder how much continuation that they can get. I think both sides of that trade still require patience, though. This might be a situation where it's like mid-February after we get through OPEX and we can get some vol unquenching to come in and loosen this market up a little bit. But at a minimum, I'm very cautious on new longs right now. That's not to say that there aren't some pockets of opportunity. I know you guys were just talking about the Chinese names before I got on. Yeah. I've been building in to the Chinese names for a month now. JD and Baba have been some of my heaviest positions, actually booked a little profit into this up move this morning. So I do think that there's pockets of opportunity out there, but for the most part, I think you got to be patient if you're looking for new longs in Mag 7, and you also got to be patient if you're looking for the catch-up trade in the small caps and the mid caps.
What about Apple? I just want to get your thoughts on Apple here because we're talking the Mag 7 here, and obviously we've had 3 or 4 of the Mag 7 that have just been unbelievable movers. Tesla's been the dog, but Apple's also been a dog, and it's just reported here. The earnings were okay. They bought the stock back. It initially dipped, and then they've bought it back here. People are talking about this Vision Pro here. It's kind of an interesting setup. That's why I just want to get your thoughts on Apple here, too. I have a small position in Apple. Thoughts here, Derrick, on Apple?
Apple 180 is the big spot to watch. The $180 support level, real big spot to watch. We've held it 3 times. We held it on earnings, the 200 days above that point now. So as long as it continues to hold 180, I think that you're in the clear on the long side of it. You start losing 180 and there could be a pretty significant pullback. You could be looking at a $10, $15 pullback on the break of that level. So keeping that one as simple as I can.
So, Derrick, I mean, you mentioned the IWM's weakness right now, and it's kind of been a tale of two markets. And, for a lot of people that haven't been in the Magnificent Seven stocks the past few months, it's like they're looking at NVIDIA, Microsoft, whatever, saying, oh, I can't buy this up here. Then they look at the IWM and they're saying, well, this is so out of favor. I can't buy this either. If we do start to get some, more chatter about rate cuts and the IWM starts heating up, are there certain stocks or sectors within the small caps that you like?
I like tech growth for when interest rates start coming down in particular. Your Palantirs of the world, Palantir obviously coming to the forefront of my brain just because of the earnings report and the move. I actually held a pretty decent sized position into that earnings report, but $20 is a big resistance level up here. So I'm booking profit into this $20 area last night and this morning. But I think that, same deal. You look at how growth tech has traded so far in 2024. A lot of these names are down 10 to 40% on the year. Some of them, it's pretty crazy actually, while you've still got NVIDIA going through the roof. So I think that you see a big catch-up trade in growth tech, but you still just have to be patient. We got to get to the point where the market has a reality check on how many cuts that we're actually going to get. And until that point, be really careful. And there might even be some shorting opportunities out there, like Tesla got downgraded this morning. That Tesla chart looks awful. It's still down 50% from highs, and you might be able to push that one still to the short side at this point.
We haven't even talked about Tesla today, but we will before the end of the show. But I mean, so do you think in terms of the small caps, you can kind of look at which stocks rallied last like November into December and that have since sold off, and then think, okay, well, if we do end up getting, some of these rate cuts, these will rally again? I mean, I'm looking at like the upstarts of the world that went up 80% in a 2-month time frame from November to December that have now sold off, where you're thinking, well, since they ran a couple months ago when the theory was rate cuts, then maybe they'll run again if we do start getting rate cuts on the table.
That's definitely what I think. These are momentum stocks. They're short squeeze stocks for a lot of them. Upstart's got a large short flow to it. So I don't love the idea of just, buying those on the way down and hoping that all of a sudden the market turns around tomorrow because we start to, move higher on cuts. I think that you wait for the whites of their eyes, let them begin to move up. You don't need to catch the absolute bottom, because if they squeeze, I mean, we've seen how the upstarts and Affirms have moved in the past. So buy them on the way up through levels versus levels. That way you've got your risk in place and you're buying that momentum on the way up and looking for that squeeze. You definitely don't want to be too early. You don't need to be first, because the moves can be massive in those names when they come in.
Great point.
And then, I guess so you already mentioned the China trade. Are there any other stocks that are getting ready to report that you've been in, or what has been your big takeaway from earnings season so far?
This earnings season's been an interesting one. We've got a lot of beats, but I think the data that I've read is that the up move on those beats has been muted compared to history. And that's actually data that I always like to pay attention to every earnings season. And something I always like to think about coming into every earnings season is, well, where is the market at this point? And if you have a very elevated market, I think we've all seen that situation where a company reports decent earnings. Look at Microsoft as an example. Microsoft's earnings were phenomenal. I think they beat on every single number. They guided fantastically well, but the stock struggled to really be able to continue because it's had such a big move into it. Obviously, you can still get a report like Meta, which was just an absolute and utter blowout. But this has been an earnings season where, for stocks that have gone up a lot, a good report's not really good enough. That report needs to be excellent in order to be able to get that continuation. But there's exceptions to that also, because again, you look at a Palantir, which is a little bit beaten up on the year, and that report I think was just okay. The profit for the next year looks good. Their guidance on that, but the revenue guidance for the next quarter was a miss. And the market's bringing it up, 20% or something on that?
It's just a stock they wanted. I mean, this AI story it was sleepy there, sitting there. I went long at 2 into the report, just like you did, Derrick, because I just felt like it was sleepy. And you know what my main reason for it was? I'm like, it's got the AI story attached. Even if it gets hit, they probably come in and buy the dip, because that's what they've been doing on AMD wasn't a great report. And then 3 days later, it's right back again. So I kind of felt like I had enough underneath demand that I was comfortable taking a small. I took a small. You said you took a sizable. I don't have as much guts as you. I took a smaller size position through the report, but I think it's just a stock that they just want, this AI story. And again, there's not a lot of like AI stocks out there. I mean, we got the NVIDIAs and the SMCIs and the AMDs and the Microsofts, but the smaller ones, like some of these, little AI stocks aren't participating. Palantir is a real company making real money here now. I feel like this is just, this AI story just isn't going away.
It's not. And the interesting thing is that the most bearish thing that you could come away from the Microsoft earnings report is that they need to spend so much money on AI. Where's that money going? It's going into NVIDIA. It's going to AMD.
It's true.
Like if that's the bear case, we're spending too much money on AI. Like, okay.
What are your thoughts on NVIDIA? I mean, it's run so far. It's up 40% this year. It's obviously the numbers, from when they were given the guidance before were phenomenal, and maybe it's just driving on the whole AI story here. Can this continue?
Yeah, so I caught that $500 breakout in NVIDIA really well, and I actually was buying ahead of 500. And I liquidated my position by like $575 and thought I was a genius. And here we are up another, $125 from that point. The move the last 3 days has really has started to become parabolic in nature. So we're like a day 4 to the upside. I know that there's new news out this morning, which is positive for Cisco. And again, I don't think that NVIDIA is going away. The AI spending, like we just said with Microsoft, is very real. But it seems to me like the stock is finally getting a bit ahead of itself. So I actually have this on my list today as a potential short back through yesterday's high, just as a trade, just as a trade off of the pretty extreme amount of extension. You could get a $50 pullback in NVIDIA right now to $650 and have the stock still be very healthy and bullish. But the parabolic nature of the move is starting to seem like it's getting a little bit ahead of itself. Volume increased again yesterday, so it looks like you're getting some maximizing volume into that parabolic move. So it'll be really interesting to see how it trades today. You got to be very careful shorting on the way up. A name that's like this, you can get
Yep.
Yeah.
You can get totally caught in this. So I think that the move here is to let's watch it today, and if they sell it down, especially on good news, whenever it's been one of the big signs, it's been a truism of my entire 15-year trading career. When you start to see stocks not be able to continue higher or even sell off on good news, a lot of times that really becomes a signal to be able to come in on the other side. So you got good news this morning with the Cisco partnership. If the stock can trade back through yesterday's low through 695, you potentially have a short where you can be shorting it on the way down versus your opening high or your pre-market high or something like that. And you could look for a move to the 80 MA on the daily chart, which is still sitting down at $650. And like I'm saying, you get that quick retracement on it. It's not a bearish stock all of a sudden. It's just normal, healthy price action of price correction after a big move.
Yeah, that's a 7-day winning streak for NVIDIA. So the top of yesterday's range is right at 694.97. So keep an eye on that. Derrick, I want to ask you, and I really haven't heard a lot of talk about this, but just being exclusive here to Meta and Amazon, I mean, those companies did have some major job cuts. Right. And I don't want to call it, financial engineering, and I'm not calling for a recession or anything, but is that concerning to you at all? I mean, the numbers were good. The buyback was good. I'm talking about Meta here. A dividend out of Meta. I mean, that opens up the stock to a whole new group of investors. But how much does that concern you at all, that, job cuts, getting rid of, bringing in the expenses? I mean, how many times can you do that?
The layoffs honestly don't concern me too much, and the reason for that was because these companies just really overhired in that 2021 period. So I think that you're just seeing these job cuts as kind of a reversion to the mean, if you will, on employment that's there. And this whole move that's come from Meta since that like $80 low has been from Zuckerberg going for efficiency and you know, to some degree, they've even been able to look at like a Twitter and Elon Musk basically cutting 90% of the employees there, and Twitter still being able to function to some degree. It's not like the platform's imploding every time you go on it. So they're like, well, if other tech companies are able to do that and still operate fine, why don't we work on efficiency as well? And again, that Meta earnings report was pretty excellent. The stock's pretty extended at this point, so I don't like new longs here at this point. But you know, the other part of it, if you really want to talk financial engineering, it's the buybacks. And that's the most difficult thing for me on trying to short any of these companies, trying to short Apple through that 180 level or whatever. Yeah. You are always fighting Apple itself buying $25 billion of stock a quarter. And you're coming in, you're trying to short that, you know they're on the bid. It just inherently makes those shorts a difficult trade.
Well, we've been on the line with Derrick Oldensmith again from T3 Trading. Derrick, thanks for hopping on with us this Tuesday. And if you guys do want to hop in to Derrick's virtual trading desk, I'll drop that link in the chat. You can do it for the rest of the week from February 6th to the 9th. Make sure to check that out, Derrick. Thank you again for hopping on with us.
Yeah, my pleasure. We're opening up my virtual trading floor to any of your listeners who want to be able to join just for this week. So it's an exclusive opportunity to trade with me and my group of professional traders. And I hope that I get to see some of your folks in there.
Awesome. Well, thank you again. Enjoy the rest of your week.
You too. Thanks.